Hello everyone, welcome to the Traders Journal. We're live here again on Wednesday, 8 p.m. London time. We're here every week and we are talking all things mindset, psychology. Kind of a recurring topic at the moment is how to become a profitable trader. So I just want to check that everything is working and then we'll kick off because we're going to go through, today we're going to talk about losses, how to manage them. And we're going to talk through 5 key factors that I think are really important to focus on when you're trying to figure out how you can start to manage your losses. If losses are sending you on a tilt, if you're struggling to cope with them. So we're going to talk all things losses today because it's really important. It's a really important part of your journey to becoming profitable is to confidently manage and be okay with losses. So let me just do the final checks. Okay, I think everything is working really good. Okay, so I'm thrilled to have you back today. If you're following along, we've been doing a series that builds on each other. And if you're following along, you're showing up every week, well done. There's a really high failure rate in trading. I don't really think it's failure. I think it's people are stuck. I think 95% of traders are stuck because they don't know how to get unstuck. And unfortunately, they quit before they figure it out. And I think that is what the failure is when you quit. So if you can stick through it and figure it out, you will come out the other end. Trading isn't easy. It's not fast. It's not an overnight thing. So your journey, you're okay where you're at. Just keep working at it because you will figure it out. And it will start to work for you. But it's important to start focusing on the right things because there's a very telling thing about that high failure rate. It means that the way the majority, and it's not even like a 60% majority, it's like a 95% majority, the way they're thinking about how to win at trading, how to become successful at trading is incorrect. And the way we think about anything is usually what's most obvious to us. If I was to start something new, all I would have is the most obvious things. So it's kind of a little bit like, you can also call it the cliches. So the first way you think about something is not always correct, and it proves very true for trading. And that's why there's such a high failure rate, because the way most people think, like obviously think, is just incorrect. So things might not always seem like that's the right answer because it doesn't seem right, but the right answer doesn't always seem right. That's the point here. So anyway, well done for sticking with it. You're doing more than 95% of people do not stick with it. They quit. So you've got to also not just be hard on yourself all the time because we just want to win. You've got to be very kind to yourself and give yourself a pat on the back when you have done well. So let's get back to losses. Now, just checking everything's good. Before we kick in, I just want to quickly introduce myself. If you have just, this is your first session with us. My name's Marisa. So why on earth am I talking about all things psychology and mindset? Who am I? Why on earth would you even listen to me? I'm a full-time trader. Before I became a full-time trader, I worked for investment banks in London. I worked in regulatory compliance. So I was very much a corporate, I like to say I was part of the rat race. I did the old commute to work. I felt very, it was a good career. It was a good area to be in. But I felt very trapped and I wanted the freedom. I wanted the freedom to work for myself. That's why I pursued trading. I didn't really do it for the money because I was already in a well-paid career. But at a point, there's also, if you work hard and you stick with something and you apply yourself, trading is uncapped financially. So there's always the financial side of things. But for me, it's the freedom that was really, it made a huge difference to me. I felt very trapped, and that's why I pursued trading. And it didn't work overnight for me either. I really had to figure this out because I also thought about very obvious answers. The more I studied things, it would eventually work. If I spend more time with the charts, eventually it would just work for me. It didn't. It's trading is an art. It's the way you behave. It's very much a psychological, behavioral science. Okay, so there is science to it, but it's behavioral. It's how you interact with charts, and that's the key to it. It's not unfortunately, it's not an intellectual pursuit because there's no right or wrong answers. There's only probability. You cannot learn enough to always be right on every single trade. Okay, so I didn't. Like, it's very obvious in hindsight, but I didn't realize it at the time. So I spent a lot of time learning, doing courses, studying books, all of that, time on the charts, nights, weekends, because I had a full-time job. So if you are on this path, I have been there, and every trader that eventually makes it has been there as well. It's it's not complex, but it's very difficult to do. But when you figure it out, it's actually doable, and it's doable for anybody that has enough desire to do this can do it and can be successful at it. I think that's the nice thing. You don't need to be a rocket scientist because that's a very limiting not I couldn't be a rocket scientist. I'm not intellectually smart enough to do that. But with trading, it's about your behavior. It's very much in your control to eventually make this work for you, but not everyone's always showing you the right things to focus on. Okay, so that's my background. That's why I became a trader. I'm now a full-time trader, so I swing trade Forex and US stocks. I'm a crypto investor, and I'm a long-term value investor in the stock markets. So that's kind of what I like to do. In 2025, I hit a big milestone, and my trading portfolio surpassed $1 million. It didn't happen overnight. It happened over 5 years for me, but it's not fast. It's not easy. It's something that you really grind away at. And my portfolio didn't go up in a straight line. It certainly had, moments of up, but lots of moments of down. And the times that you're at the peak, the highest point in your portfolio, are very short-lived because they're always followed by drawdowns. Those aren't usually huge, but they can be. So it's slow. It's about just trusting your process, starting to trust in yourself and starting to have the belief. And that's how you grow this. This is a marathon career. If you're getting into this, it's not a sprint. And now my real passion is mindset and psychology of trading. I love it. That's what my entire, aside from trading in the mornings, that's my focus. I'm very passionate about mindset and psychology because that is what will make you profitable. I'm also a trained coach. So in 2009 through to 2011, I worked with a coach. He's actually based in Los Angeles. He's a success coach for Hollywood called Bernard Heller. And I worked with him in LA and in London. And that, I think, got my interest in the coaching methodology, so why coaching works. I used it in my corporate career. I've used it in other areas of my life. I just didn't realize that it was needed for trading. And then I was lucky enough in 2020 to meet and find Daniel Martin, who's with City Traders Imperium, and I studied with him. to become a trading coach. So I'm now the performance coach, one of the performance coaches for City Traders Imperium. So that's me in a nutshell. And that is why today I'm talking about losses, because it's so critically important to our trading. And we have to get our heads around it. So we're going to start off by just reframing losses, okay? Because I'm just going to say we've got a 50-50 profitability in our strategies. You might have 60-40, you might have 70-30 if you've back tested it. If you're on live trading a 60% win rate, you're a very, very good trader. Okay, so if you're not hitting 60% win rates, that's okay, because only the top people kind of hit that. 50% is far more normal, and even having a 40% win rate and a 60% loss rate is normal as well. You can be very profitable on these kind of numbers, right? But what I want to focus on is that high percentage. I'm just going to assume it's about 50-50. 50% of your trades are losses, can be losses. This is enormous, okay? There's no other area in your life, there's no other job, there's no other hobby, there's no other sport or anything you pursue. If you are, I'm going to say wrong, so if you have losses 50% of the time, you're not very good at what you do, okay? In my old career, if I was wrong 50% of the time, I would be fired. It's not something that we see as success, okay? And the way we're framing losses is that when you have a loss, you're wrong, because obviously trading, investing, the goal is to have profits. So therefore our minds, and this is where I'm kind of going back to, your mind will make connections that are obvious. So sometimes we have to undo the obvious connections and reframe our minds logically. Your mind is making connections that when you have losses, you're wrong. And when you have wins, you're right, because wins are supporting the goal of making money, okay? So you have to just, at a logical level, we're not even talking yet about how this makes us feel, just at a logical level, we have to reframe that for ourselves, that the goal in trading is not to make money, it's to trade your strategy. It's to do what your strategy says you should do to achieve an outcome, okay? The outcome is obviously profits. And the outcome of any trade is either a loss or a win. And you've got to logically detach from the outcomes versus the right or wrong. To be right in trading is to follow your rules. It's not about the outcome. The outcome will be whatever it will be. And remember, losses, you will have losses. You cannot avoid them. And, like, it can happen and it will happen. Even if you put your stop loss somewhere where you're like, it will never get there, it can and it will. And the longer you have experience with trading, the more those events hit you, and then you actually learn the lesson. So I can say to you, it can happen and it will happen. It won't be until it happens to you that you go, okay, it can happen and it will happen. In 2007, this is when I first dipped my toe into trading, and I first discovered it, and I first went, wow, this is something that exists, and people that aren't working for big hedge funds, so retail traders, could actually do this. This is when I first discovered it. I had an account that I funded with a few $1,000s, and that was a lot to me at the time. It was like all my savings, and I kind of in my mind was like, well, even if I get a drawdown on my account, eventually it will go that way, and then I can grab the profit. So I started trading without a stop loss. I wasn't trading a lot. I was working. This is very much a kind of dabbling, learning thing. I think I'd only been trading for about 2 months, not very much, but when I got time, I'd open up the charts and have a dabble. And in December 2007, it was roughly December 2007, it was the start of the global financial crisis. And we hit a black, whatever day it was, and prices went down. And I had that, okay, well, it can't just go down forever. It has to turn around at some point. Okay, it can and it will. I went out for dinner, I came back, and my entire account was wiped out. And it wasn't done yet. Prices were still going further down. But I'd lost my entire account. That I got margin called ultimately, and they closed the account for me. It was just thousands of dollars just gone. It can happen and it will happen. That was my first experience. Recently, we had the Bitcoin crash and the crypto crash last Friday, and I think it continued early this week. That is kind of a second dip. I don't trade leverage anymore, but I don't trade leverage anymore because this is my third crypto cycle, and I've been wiped out by leverage. Not wiped out, my leverage account was wiped out. Because I put my stop loss somewhere where I went, it will never get there. It can and it will. And I don't trade leverage now, not because I'm like, oh, I know not to trade leverage. I don't trade leverage because I've experienced what can happen. It can and it will. So there's a lot of things that you're going to just have to experience over time. But losses will happen. And you have to manage them, and you have to put your risk on, you have to put your stop loss in. You have to. I don't think twice about putting my stop loss in now. It never bothers me. It's not something I ever make mistakes on anymore. It's like I'm like a robot. When I place my trade, I put in the stop loss at the same time, then I go and check that the stop loss is there. And I never move it. I haven't moved my stop loss for years. So it is something that the more you get burnt by not having stop losses, by moving stop losses. We're going to talk about a couple of tools that you can implement to help you manage it now. But over time, you're going to, you'll learn the lesson. You'll either learn the lesson or you'll learn the lesson the hard way. And, when you're learning to trade, this is why I'm a big advocate of always learning on a challenge account through prop firms, because you spend $100, $200, $300 for your account, and then when you hit your 4%, the account is gone, but you've lost $300. You haven't lost thousands like I did, because you will, while you are learning to trade, you will make mistakes, and you will lose your entire account multiple times. I failed 10 I lost 10 challenge accounts before I became profitable. And I lost 3 of my own accounts. And that was very, very, very expensive. That was thousands of dollars. The prop firm was, 10 accounts was probably about $1,500 all up for 10 accounts. It's very economical to use challenge accounts while you are learning, because it doesn't matter what account you have, you're going to blow some accounts, because some lessons you're just going to have to learn from experience. Okay. And it's in hindsight, it's probably the best way to learn, because when you lose an account like that, you start to, when I lost that account that December, I didn't ever trade without a stop loss. Okay, then I moved my stop. I went through a period of moving my stop loss. Then I stopped doing that. So you'll learn the lesson one way or another, but try to do it economically. Okay. Now, number one. So let's start going through our 5 things that I think is going to help you to start managing losses better, getting a better viewpoint, reframing your losses better. Okay. Number 1 is that you've got to reframe this point I was talking about before about being wrong. Okay. Right and wrong is not about losses and winners. It's about your process. And sometimes you can think you have issues with losses, but these aren't real losses. These are actually losses because you might have had 1 or 2 losses on trading your strategy correctly, and then you get upset about that, so you start making mistakes, doing FOMO, revenge trading, just trading the wrong entries, and then those are more losses. Okay, so those losses, you don't have to start figuring out how do I manage those losses. You're managing the wrong problem. Okay, it's not the losses that are the problem, it's the mistakes you're making. But those can probably be tied back to the original losses on your real strategy. So part of this is you've got to figure out what's your real problem. Is it that you can't handle losses, or is it that your losses start getting out of control and then that's what you can't handle? But why are they getting out of control in the first place? Probably you can't handle those couple of real losses. So it gets a little bit like a ball of string. That's how you've got to unpiece this and figure out what's actually happening for you. What is causing your kind of, you to go on tilt, let's say. And that can only be done by journaling and tracking what you've done versus what you should have done every week, and unpicking it and going, what is causing this? And I went through, I think a few weeks ago, we went through a webinar of the 2 metrics that you must track. So go and find that webinar. It's on our channel somewhere, but it's 2 metrics that are really going to help you understand what your issue is, because you can't solve a problem if you don't know what the problem is. Okay, so figure out what is causing that initial. Is it that you really can't manage losses, or 1 or 2 losses just send you on a tilt and then you have a string of losses? Okay, but you have to start thinking about right or wrong being, did I follow my process? Did I follow my rules? Okay, that's the starting point. You can still have issues with your losses even if you're doing that, but if you're thinking about right or wrong, losses are just wrong, you have to logically undo that, and losses are not wrong if they're part of your strategy, because you cannot avoid losses. You cannot. It's part of doing business. Okay, it's a cost of your business. But if that cost of your business is sending you on a roller coaster to make your business very, very expensive because you're making all these mistakes and those end up in losses, okay, we've got to work through that, right? Now, number 2, let's talk about the reality of risk and probabilities. So we've just kind of had a 50% win rate as a starting point. Let's say your win rate was a bit better. You had 60% win rate and 40% loss rate. It means that over 100 trades, 40 times you will have losses. Now, you don't know what order those losses are going to come in. They can come in one, and then you have a string of winners, and then another one, you have a string of winners. Or you can have 10 of those losses in a row. You could have 40. You could have all 40 losses in a row. So you could have 60 winners, 40 losses. Let's say you start your strategy in August, and all of those losses happened at the start of the year. Those winners, sorry, happened at the start of the year, and now you're into the losses. You don't know this, okay? And you start having a string of losses. You could have 40 losses, and then your 100 could reset, and you could have another 40 straight away. It can happen, and it will happen. This is a very extreme example I'm talking about, but do not underestimate the number of losses that can be strung together in a probability, in a set of probabilities. Have you ever been in a casino and you walk past a roulette table and you just see black, 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 red, black, because it shows the past, I don't know how many results. Black, 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 red, black, 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 red. And you see the table just crowded with people because everyone's now betting red, because they're like, red has to happen. Probability-wise, it has to start going red, 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 red. And you just see this pattern continue, and everyone's going all in on red, and it keeps hitting black. It can happen, and it will happen. Probabilities, there's nothing to say that probabilities need to be nice and neat and orderly, okay? So sometimes the way we calculate risk. People saying, risk 1%, no more than 2%. Well, if you risk 2% and you have 10 losses in a row, that's 20%. That's big. I think people are calculating their risk and their string of losses that can happen in a row incorrectly. You need to really kind of start off with a worst case scenario, and then from there maybe halve that and take some calculated decisions, right? But just probably what you're working out of max losses that I could have, you should probably double or triple that, and realistically, because losses can happen in a string like that really, really easily. I think far more easily than people think. Then you have to throw in the probability of you as a human making some errors, which is going to increase that loss rate. That's why someone trading at a 60% win rate is really, really good, because most people will keep making a few mistakes, and your win rate will come down to something more like 50%. That's why it's like it. You don't exclude the fact that you will still make mistakes. You're human. You just want to minimize that. You want to kind of make as few mistakes as possible, and you certainly don't want to go off tilt. And by off tilt, I mean where you're making catastrophic mistakes. You're not making 10 mistakes in a row. You're making catastrophic mistakes. You are removing your stop loss. You're placing your stop loss with this enormous risk that's going to wipe out your whole account, where you're revenge trading. Okay, these are catastrophic mistakes that will just wipe out your account. But if you are managing your risk, you could have 10 losses in a row, and then you could have another 4 or 5 mistakes that have the same loss, but it increases your run of losses. So just factor that in when you're calculating risk, especially if you're on an account like a prop firm account. You don't want to keep losing your accounts, right? You want to be able to comfortably be able to absorb as many losses as you need to absorb so you can keep trading, because as soon as you're under too much pressure, the losses start piling up and you're like, well, those are actually real losses. That pressure can send you on a tilt, can send you on a revenge trade, and that's a catastrophic mistake, and that's what you want to really massively avoid. Losses are just part of doing your business, right? Okay. The third thing, and this is far more controversial. This topic upsets some people, I'll be honest. Let me just check everything's still working well. Great. Okay, I've got some nice comments here. Hi, the best coach ever. Thank you for that comment. Golden Trader Program. Thanks. Okay, now let me get to my controversial topic. Okay. You need to know what business you're in. Okay, we're already starting to, don't get upset. Just listen through this, okay? You do need to understand what business you are in. And people get very upset when trading is associated, or we use the word gambling. Okay. But if you do not get your head around this, you will have a catastrophic, in my opinion, problem with what you're trying to do. You're trying to become a trader, so you need to understand the business you are in. Okay. Now, the reason people get upset when trading is linked to gambling is that we have very obvious connections, and this is again where the obvious is not always the truth. Okay. Or the obvious is not always right. You can't just rely on your cliched brain to problem solve here. Gambling, when we hear it, it's associated with all the negative parts of gambling. Degenerate gamblers, we think of people just walking into casinos and throwing money at tables with, We think of addiction. We think of just losing all your money, greed, kind of. It's all the negative things with gambling. There's the flip side of gambling, which is the business of gambling. Now, there are very, very smart business people that have gotten millions and millions and trillions, quite frankly, of investment, and they have set up gambling businesses called casinos. If you think of Las Vegas, there are enormous, enormous, enormous businesses there, and they have got an investment, and they are business people, and they have invested this money into a casino because they know that they may have to pay out some gamblers. Anything could happen on any game. But over time, they are like, we will be raking in the money, because over time they have what's called an edge, a probability that puts things in their favor, and they can, with certainty, extract profits as a business from that casino. Okay. The other side of their business are the gamblers, the degenerate gamblers. Okay. But everybody just focuses on the degenerate side. Well, without the business side, there is no gambling. Okay. There's always two sides of gambling. And the business side are very structured. Those business owners aren't coming down and throwing money at the roulette table. That's not how they make their money. They're playing the other side of everyone's gamble, and they're happy to take the other side, even though on any one gamble someone could win big, right? That's why they go to the casino. There are winners, but they're not structured winners. The casino is the structured side. It's the business side. It's the professional side. As a trader, you are operating on that side. Your business is one of gambling, but it's the structured, the professional side of gambling, because you have a strategy that over 100 trades gives you a probability of wins. Any one trade, anything can happen. Okay, that's how gambling works. Anything can happen on that one trade. And over 100 trades, the probability sits on this thing will happen more often than this one, but we just don't know what order that will happen in. It could happen on these trades, it could happen on these trades. On any one trade, you do not know what will happen. Okay? If you're in the business of selling things to people, you can pretty much, in every sale, it's expected that sale will be a sale. You might have some return rates. They know what the percentages are, etc. But it's a far more, a sale is a sale. It's not like every sale, 50-50, that this person might not like it. They've got very high percentages of most customers will like what we sell them. Okay. With trading, we've got every single trade, anything can happen. It can happen and it will happen. You cannot learn your way into knowing what will happen, but you can learn your way into knowing what will happen over 100 trades. Over 100 trades, you've got the probability. But if you do not understand and accept this part of your business, quite frankly, you don't know what business you are in. So you're trying to run a business, trying to start a business that you don't understand what business you are in. Now, I hope that doesn't hurt your feelings. I also, for a long time, spent all my time in the charts trying to, every time I had a loss, I wanted to figure out why. But if you go and read Mark Douglas's book, Trading in the Zone, it's a core principle of his. On any one trade, anything can happen, and you must be willing to place your bet on that trade and be willing to find out, is this a winner, is it a loser? So all you're doing is you're finding out. Now, if you want to explain to me how that isn't the business of gambling, professional gambling, then, put it in the comments. I'd love to hear it. But it's all gambling isn't necessary. There's a very big negative side to gambling. This isn't the gambling we're talking about. We're not degenerate gamblers. We don't have addictions. Maybe there's parts of you that does, and you've got to figure that out and get a control of that. And maybe you are just throwing money at trades. Okay, you need to recognize that, and you need to bring yourself back and go, I'm in the business. I'm the professional side of gambling. I don't behave like that. I play my rules out over a series of trades, and on any trade anything can happen, and if that trade is a loss, I'm expecting that losses will happen. I don't then go and figure out, oh my gosh, why did I have a loss? Well, you had a loss because you're expecting 40%, 50% of these will be losses. That one was a loss. Okay, the business that you're in is of probability, is of risk. You need to accept that, and you need to actually go and learn more about it. Go and dive into it. This is your business. Okay. If the term gambling offends you so much, two things. One is you're probably thinking of the negative side of gambling. And there are people that are professional gamblers. There's a lot of professional poker players. They don't just bet on, the way us as just hobbyists play poker. We love to just go, I want to just see, play this out. I just want to see what cards they have. I'm just going to throw this money in because it's just chips and it's not real money. Professional poker players don't play like that. They play very much according to rules. They know that there's always a right move and there's a wrong move. Doesn't mean that the outcome is guaranteed, but there's a right move and a wrong move. Okay? If you have pocket aces, there's a percentage chance that those will beat every other cards, but it's a percentage. And I think it's pretty low, actually, considering. You always think pocket aces will just win, but it's something like 54% of the time it will beat any other pocket pairs or any other pair of cards. So people can a professional poker player gambler can quite comfortably bet on that because 54% chance, but there's a 45% chance that someone else wins. So do you think that happens? Can happen, and it does happen. It does. But if you play that over time, every hand, whenever you get those, you play it, 54% of the time you're going to win. It might not all happen in that game. It might happen over a series of tournaments. But over time, that poker player knows that they are going to be making money. Possibly not on that hand. If they play the cards right, probability-wise, there are profits. And that's all you're doing with your trading. You've got a probability on your rules, on your strategy, and you now need to play it. It's not about, losses and winners. It's just play your strategy. Okay. Now we're going to get on to number 4. So far we've covered the logical side of losses, and you need to reframe your logical side, because this is what you've got to always get back to your logical brain, and that's what you've got to cling on to. But logically, if you don't logically have your head around losses and your business and what you're actually trying to do here, you're going to really struggle, okay? Because now we're getting to the emotional side of it, okay? So you're already going to have to deal with the emotional side of losses. When you get to the logical side and your logic around losses is incorrect, you're going to be in trouble, okay? So we've gone through the logical side of how to start reframing and rethinking losses. Now, why do losses really hurt, and why is it not possible? The answer is not to reduce your risk, okay? Because it's got nothing to do with losing money. You're upset, or losses hurt us emotionally, because it's not the monetary loss, it's what that loss represents. And what that loss represents is something I'm going to go back to right at the start of this webinar, is that the loss actually represents you being wrong. Okay, so now logically, we've already reframed this, that a loss isn't wrong, a loss is part of your business, okay? But on your emotional side, your emotional brain is still going to see a loss as you being wrong. What does that mean? It means that your status, your ego, your, let's go back to the start. Let's go back to when you were 5 and you were carefree, happy. You're probably your most authentic self at 5. Then you go out into the world and you start off with school and society, and you're just told constantly, whether it's someone telling you off, like telling you not to do that, telling you not to do that, or whether it's subconsciously through like exam results or the way people behave to you. The world basically starts telling you how you're wrong, how what you do isn't good enough, what you do is not right. We start building these walls around ourselves, protecting ourselves because it hurts, okay? And what's actually hurting is our small little egos at 5 already are starting to be chipped away. Everyone's telling us, whether a teacher shouts at you in the class, or you go out into the playground and this day some friends don't want to play with you, then you fail a test, and then you get home and your parents are mad because you didn't do this or this or this. It chips away at our self-esteem, at our egos, okay? Now you come out the end and you're an adult. Society doesn't end. It carries on. It carries on giving you these signals, okay? So us as people, just us as humans, we're quite sensitive to criticism, to stimulus that tells us that we're wrong, that we're not good enough, that we don't matter. You might not want to admit it. None of us want to admit it. And you kind of get used to being okay with it, and kind of you can have different attitudes. Maybe you laugh it off a bit. Some people don't. They get very defensive. We all deal with it differently, but it hurts. That's what hurts. Okay. And that's what losses are just telling us again. It connects with that little voice inside of us that's again going, you're wrong, you're not good enough, this will never work for you. It might not be conscious, you might not have a loss and go, you're not good enough. It's not at that level. It's subconsciously. It's another thing telling us we're not good enough, and that hurts. And that's why you can't reduce the money size, because it's not the money. It's hurting us at a status level. Okay, we all have a status level of how we feel. We want to feel good about ourselves, and losses make us feel bad about ourselves because it's telling us again, you were wrong. So the emotional side is going to be harder and longer to fix because these little voices will constantly talk to us. But if we can get a hand, like just pause that emotional side of our brains long enough to get back to our logical sides, that you can tell yourself again, logically, it's not about being right or wrong. Losses are just part of your business. You weren't right or wrong. Did you follow your process? That's what matters. Okay. That's what we're trying to do. So number 5 is actually the tool of how to park this emotional side. You need some distance. So after you've had a loss, I want you to walk away. Now, I don't know if you need 5 minutes, if you need 10 minutes. To be honest, for me, to fix this for myself, I traded on the daily chart because I needed a few hours to go for a walk and get back to my logical brain and talk myself positive talk to go, it's not you, it's the nature of your business. Losses are normal. Losses are, however long it takes you to just get back to your logical brain and reframe it to yourself. And the good thing is that tools like this can help us manage the moment. And logically, the more you can get back to your logical level, your logical brain can talk to your emotional brain and start to minimize the impact of these losses. So over time, you'll start to just normalize this. It won't have this big impact over time, that can take time. So that's why you need tools like, journaling. Like if you have a loss, you should have a routine where you close your computer, walk away, don't jump straight into another trade, because your logical brain isn't in control yet. It's your emotional brain. And you've got to realize your emotional brain is now telling your psyche that you're not good enough. And that's why revenge trading comes out, because it's your emotional brain is now going, I know I want to protect you, so let's prove them right, and let's prove that this next one's going to work. That's what revenge trading is. It's your emotional brain trying to protect yourself. Okay, it's only doing something it thinks is good for you, but it's trying to protect your status by going, let's show them. That's why revenge trading is so powerful. We've all done it, that you're almost like, entering the trade with, because you're like, I'm going to show them. And you're only showing them because your ego is hurt. And your ego is hurt because it's not your fault. We all have egos, but the world has damaged our egos because, the system doesn't really care about us as humans and how frail we actually are, like how emotionally we actually are. We go to school and get going to this really horrible system that just wears us down, quite frankly. And then we spend our 20s and 30s and 40s building ourselves back up. And I guess that brings me back to, the final tool you can use is something like coaching. That's why coaching works, because we dig into these, we kind of undo what society has done and we get back to our authentic selves. That's, in a very big nutshell, that's what coaching does in a condensed time period, is it actually through talking through and kind of figuring out what the actual problem is for you specifically, we actually get you back to your authentic self, your lovely little 5-year-old self that has the confidence, that has self-belief, and that can manage things hitting our egos, because it doesn't affect us that badly. Coaching is just a condensed way to do that in a fast time frame. Over time, if you keep, doing what I've told you, the tool, you walk away from your losses, go for a walk, get back to your logical brain, and you don't know how long you've got to figure out for yourself how long it takes you to do that. But all you need to do is get back to your logical brain, because we've now reframed logically what losses are. And as soon as you're back in your logical brain, it will send signals to your emotional brain of just don't react so badly next time. Okay, it will still do it because it's an automatic response to try and protect you. But over time, so like let's say 4 to 6 years, that's why trading takes about 4 to 6 years to become profitable, is because over that time you actually become an expert at what you do, and the emotional effects are less. It's a bit like, imagine if you take a sailing course. Okay, if I took a sailing course and I was sailing a catamaran tomorrow and there was a storm, I think I would actually I wouldn't know what to do, even though I'd done some classes, and I would actually panic, because the fear and it would have such an impact on me. I think I'd be absolutely useless. I would not be able to sail that sailboat. Now, fast forward to 10 years, if I've been sailing and I've had this experience, I wouldn't panic in a storm. I would kind of rely on my, I'd kind of keep going back to my logical brain. I might see a big wave and you can't help but be like, oh my gosh, that's what could happen. Your sailboat could sink. But you would go back to your logically rely on, turn the boat this way, bring the sails down. You'd rely on your logical brain far more because you've got the experience. So experience will eventually sort this out for you. It's just that experience takes time. And that's why it's about working through this. Don't quit, just work through it, because experience eventually will get you there. But there's tools that you can use to manage that impact. And then, of course, there's the option to do something like coaching if you really want to kind of like just, you know, just apply pressure and just do it. Just go, this is what I want to do. Boom, big, 20 hours over 6 months, done. So this is how you're going to start managing losses. I know, as everything to do with trading, the answer is always not that obvious, because the problem is not always what you think it is. The most obvious things are not always right in trading. And I'm going to stop there. I think that's probably a lot to take in. It's been a long session today. But thank you for all the comments. Thanks for watching. I've really enjoyed the session, actually. And believe it or not, no, not believe it or not, I'm a trader, so of course believe it. I'm off a string of losses on my Forex accounts over August and September. They were difficult months. And coming back to just reminding yourself about your business of trading and how and why these things impact you is very helpful. I find these things helpful for my own trading, because at the end of the day, we're human, and our natural, our biology of being human will just kick in. Your emotional brain will just kick in, and you'll constantly have to kind of just recognize that, be aware of it, and then put it back into check with your logical brain. And now that you've got your good logical thoughts and understanding about what losses really are, you can actually start to manage these. So I hope you have a great week. Enjoy your trading. Just be 1% better than last week. That's all you need to do every week, because that compounds over time. You don't have to be perfect. You just have to be better. So have a great week, and I'll see you next week.